All right, I did it. Hello and welcome back to another video. I am your host, Young Buffett. In today's video, I am going to break down why I bought AMC, or at least scaled into it. So if you're new here, just a quick update. I decided I want to get into meme stocks, momentum stocks, stocks that have potential for a short squeeze or a gamma squeeze, stocks that are most talked about on Reddit and so on. So I've been investing in the stock market for about 15 years now. I have been a long-term investor. I've been an options trader. I've done it all: long-term, swing trading, day trading. And I wanted to take a stab at what it would be like if I started investing and monitoring these types of meme and momentum and short squeeze type stocks. Decided to document my journey on YouTube, which is why you're watching it now. So if you're interested in stuff like that, definitely hit that subscribe button. If you're also interested in educational content, I post those too. How to start a long-term portfolio, how to trade options, just the list goes on. I have like 65 videos on YouTube now. But the reason why you guys clicked this video today, I bought AMC. Without wasting your guys' time, let's just jump right into it. APE Wisdom covers Wall Street Bets, Wall Street Bets New, Wall Street Bets Elite, stocks, investing, SPACs, options, and day trading subreddits. The most talked about stocks in the past 24 hours have been SPY, because everybody loves talking about SPY. Tilray, AMD has just been killing it. The stock just doesn't go down. Honestly, I should just buy AMD and call it a day. Fun fact, AMD used to be the original meme stock. Anyways, GameStop making a lot of progress. It was like not even in the top 10 a couple days ago. Facebook, and then good old AMC. So let's check out what people are saying about AMC. Nearby words include GME, like, buy, BB, more, should, still, apes, made, calls, selling, money, calls, up, hold. Overall, 74% positive sentiment. So it's very interesting. People are super excited about it still, which is why it caught my attention. This is Swaggy Stocks. It takes a look at Wall Street Bets and comment volume and stuff. Tilray, AMD, Apple, Microsoft, QQQ, Baba, Google, Clove, Wish, Facebook, GME, Tesla, CLF, Tall, BB, Neo, Amazon, Myrna, blah, blah, blah. AMC, close to the end of the list, which is very interesting. So if we click here, this is one of my favorite charts to take a look at. What affects what? So the price of the stock was here. Comment volume was low. Stock starts going down. Comment volume starts going up. Comment volume starts going down. Stock goes down. Kind of chills out a little bit. Comment volume goes way up. Stock starts falling like a rock. Comment volume starts to spike. Then stock goes up. Don't know what to make of it, but it seems like there's a little bit of divergence going on. And I want to be early to a situation like this. So I like keeping track of how people are talking about it. I like keeping track of what's going on, what the sentiment is like right now. And it seems to be pumping the brakes a little bit. Things start to slow down a little bit in comment volume, but I'm curious to see what that does with the stock price. Jumping over into Stock Grid, where I can take a look at some dark pool data. As always, super sketch. Net short volume is negative 10.8 million. Net short volume in dollars is negative $420 million. So a lot of dark pool activity going on. I'm very curious to start tracking how this affects the retail market price. It seems like there's a lot of action going on and a lot of short selling going on in the dark pool data here. But I bought Ortex, so you don't have to. Jumping into AMC's Ortex data is hilarious to me. So analysts, 4 of them say sell this thing, 5 of them say just hold on. The price target is $5.25. That is a negative 86.19 potential return. No thanks. I don't think AMC will ever see $5.25. I don't know who these people are, but there is no way AMC is going that low. Famous last words. Watch this thing go to 5 next week. Anyways, short interest data for AMC is also very interesting. So we're looking at a short interest change of 0.74% increase today, with returned shares sitting at 1.46 and borrowed shares at 2.18. Overall, borrowed change is about 725,000 for today. The current short interest percentage of the float is 15.11, so it is still very heavily shorted. Days to cover sitting at about half a day because of volume probably. And short interest does seem to be going up. So I'm very curious to see what happens there. Now, I don't know if you guys have heard of the NSCC 2021-010. This rule is simple. It means when these hedge funds close out their shorts and the mother of all shorts starts, they can give their long positions from another stock to the clearinghouse as collateral for cash to pay for their losses. This way it doesn't tank the S&P 500 and the rest of the market as the rest of the market, and stays localized somewhat. Probably because there's going to be an actual crash after the mother of all short squeezes. This is good for two reasons. One, it means that the mother of all short squeezes won't ruin the rest of the market to a degree, and means that major banks like BlackRock, who are benefiting from the mother of all short squeezes, won't lose on their other large positions. And two, it means that there is a geyser. It means that this geyser is about to burst and rain money everywhere at any point now. It might actually be the final piece for a green light. So I thought this was really interesting. I wanted to share this with you guys because yes. So if a massive short squeeze was to happen, right? Massive short squeeze. If that was to happen, that would actually affect the entire stock market. People would have to liquidate other positions to be able to pay for the damage done due to AMC or GME or Clove or whatever is being squeezed. That is not good for the market, right? But if they can use other shares as collateral instead of having to liquidate, all they would be doing is moving shares around. So again, it's not good for the hedge funds by any means, but it's good for the overall market. Now, I bought AMC today. 25 shares at $38.85. Why? Because I felt like it. Because I wanna start diversifying my little meme portfolio. I am going to slowly scale into AMC. I'm going to deploy a reverse pyramid strategy here. Buying 25 shares now. If the price goes down, I'll buy 50 shares. If the price really goes down, I'll buy 75 more shares. But I want to utilize time. Time seems to kind of be on my side at this point. I want to scale into it. Make sure I get the best entry, the best price. And I want to hold over 100 shares. So if and when some sort of squeeze happens, or if the shares continue to rise, then I can start selling covered calls, make my money back, and essentially fund a free AMC portfolio. That is my strategy. That is what I've been trying to do on Clove. If you watch any of my other videos, except Clove went the opposite direction ever since I bought it. So if AMC also goes down, I'm just convinced I am not a good meme stock trader. Jumping into the options chain, tons and tons and tons of volume. Very, very interesting to see how many people think AMC is going to 125 in the next 2 days. Guys, I'm not a financial advisor by any means, right? I don't know what I'm talking about half the time. And I'm just a kid throwing some money at some stocks to see what happens. Now, with all of that said, I'm going to tell you guys something. Do your own research. And after you do your own research, you'll probably come to the same conclusion as me. Stop wasting money on super far out of the money calls. 4,000, 1,000, 500. Then that's not even including all of the numbers in between. On these strikes, the 125, the 100, the 90, the 82, on a weekly, if you want to buy options, what I highly suggest you do is buy yourself some time to be right. Okay? Either that or wait. Wait and see what happens. I would rather be late than wrong. Another thing to take into consideration is when you are buying deep out of the money calls, if they expire worthless, that means you lost out, and whoever sold you those deep out of the money calls gets to profit the premium. Now, who's selling you deep out of the money calls? Hedge funds and other people who are market makers. So aren't those the people that you're trying to fight against, whatever your guys' holy war is? And why are you funding their accounts with these deep out of the money calls? Moral of the story, be careful. Go slow. Play it safe. Scaling in. If you enjoy this type of content, definitely hit that subscribe button. Should be fun. Should be cool to see what happens. I'm expecting over 40 within the next week or so. Then we'll see where it goes from there. I'll catch you guys on the next video. I get back to every single comment, so feel free to ask me any questions. I look forward to this AMC adventure with all of you guys.